Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 10th of April. I'm going to move on to dollar yen now. Certainly dollar yen has been one of the charts where the dollar has come under significant pressure in recent days. However, what I've done here so far is I've pulled right back for this is over the past year on dollar yen, and this is the big uptrend that we've been playing in, and it's pretty much bang on it now. Also, the 144-day moving average, which performed the base of support in June, but then slightly, you could argue, through that became a bit of a pivot level through the back end of 2013. However, 2014 has become the base of support once more. So you've got that in place, I think, on this chart now, and what we're seeing is as a test of that, actually once more again today, 101.56 is where that 144-day moving average comes in. So you're at some key levels on this chart, but I don't think, looking at these momentum indicators, they don't really suggest that we're on the brink of a huge decline, or they're not really suggesting that momentum is against the dollar in this chart. The RSI is still back around 40, which is pretty much where it got to in its lows in March, and the MACD lines are still around neutral. You'd argue that the red signal line is just crossed over, but it's not excessively bearish, and I'd say they're on the bearish. What I would say is these momentum indicators are probably on the bearish side of neutral, whereby, as I said, the RSI hitting 40, the MACD lines just around that neutral area. So I'm not going to get overly worked up about this quite yet, but as I said, the price on this daily chart is beginning to now test this key moving average once more. And on the intraday chart, you'll see that again. 101.52 was the low 2 days ago, following on from that Japanese monetary policy statement. But the trading other than that has been fairly sort of range bound between 101.52 and up to 102.14. So it's just towards the low of that range at the moment. But you would say that certainly these intraday momentum indicators are not especially positive. The MACD lines have just unwound and crossing over back below the neutral line once more suggests downside pressure, and also the RSI is certainly not in positive configuration either. So if these momentum indicators certainly suggest that perhaps 101.52 will come under further pressure, and if that breaks, then you'd be looking back at the key low of 101.17, which is where we got in early to mid-March as the key low. So that could be seen if that 101.52 level breaks. But at the moment, the support is still intact on that, and we wait to see the breakout. But other than that, you're sort of, as I said, seeing a bit of a trading range. The downside pressure following on from that Asian trading session is still there, but in the European trading, that's slightly, you would argue, just begun to slow down somewhat. So maybe you could start to think about the possibility of that 101.52 level holding. But I think this is one that we should certainly wait off for, and just hold off just to see exactly what happens in the coming hours, because I think we're in this bit of a trading range at the moment, and it's difficult to say exactly whether it's going to break. On a longer term basis, personally, I've recently just put a long position in, as I think this big uptrend and the 144-day moving average will ultimately provide support, and I think it will continue to push higher within this big trading band that we are playing around with, and I think it will rally in due course, but certainly near term the pressure is on, and that support at 101.52. Anyway, I wish you good luck in your trading on dollar yen today, and I will speak to you later. Thank you.